But what would a default of Greece mean for the United States and for the larger economy, the global economy? For the answers, we're joined from Newcastle, England by Bloomberg Best and High Frequency Economics Chief U.S. Economist Ian Shepherdson. Ian, great to have you back on the program. And, these comments coming out from Uday, which, a lot of people would expect. Bank CEOs will come out and say they have ample liquidity. What I was trying to say earlier, not so elegantly, but I'm trying to say that now, is basically a lot of bank CEOs will come out and say that they're fine. However, it's what the market believes. Do you believe that they'll be fine?
Well, it looks increasingly unlikely that they're going to be fine. The whole European banking edifice is at risk now. It's not really Greece. I mean, Greece is clearly going to default. It's what happens next in Italy in particular and in Spain. And the exposure of the European banks to Italy and Spain and other European countries is enormous. And it's very hard to see how, if all the dominoes start to fall, the European banking system could withstand it. And that's where the danger comes to the US, because although most US institutions have got pretty trivial exposure to Greece, we've got big exposure both directly and also through instruments like CDS to the whole major European banking system.
Are you getting a sense that the lending market is freezing up?
Well, it's been freezing up gradually for a long while now. Certainly, small European banks in London, which used to do a lot of short-term dollar financing through American counterparts, are finding it pretty much impossible to do business there. So we're clearly seeing American institutions retreating from European bank risk. But there's a limit to how far you can go, and it's not clear to me that you can retreat far enough if the whole thing comes crashing down in Europe. Unquestionably, the waves will come across the Atlantic.
So this is do or die time for the European officials. What do we need to see from Angela Merkel and others to make sure that this does not get worse?
Well, we need to see cast iron guarantees backed with hard cash that Italy won't be allowed to go under. It's pretty clear that Germany is casting adrift Greece, and the markets are fully pricing in now a Greek default. It's all really about Italy. Italy is the third biggest sovereign borrower on earth. Italian yields are up again today after their auction, and the market clearly is beginning to take the view that the Italian position is intractable. It's not intractable if they have access to a lot of money in a great hurry, but it's just not clear that that's happening. And so I think from an American perspective, you have to start preparing for the worst now, because it's just not clear that European politicians are going to do what they have to do.
Okay, and what do you mean preparing for the worst? What does that mean exactly?
Well, in terms of the worst, we'd be looking at structural failures in the European banking system. And therefore, we'd be looking at a retreat in financial markets globally from all banking risk, because no one's going to start adding up who owes what to whom on the day that a major European bank goes bust. Everyone's going to flee the sector globally, and we're going to see a freezing up of short-term financing of the entire banking system, even among institutions who might be blameless as far as our own balance sheets are concerned, like we saw after Lehman, when perfectly good institutions couldn't raise money either. And so the danger is that we then slump back into credit tightness, which would be tragic from the US perspective, given that US bank credit is just starting to revive again in quite a significant way. Okay,
so what you're saying is essentially that there's a very good chance that if this doesn't get contained, that we could see a huge financial institution in Europe go bust. What is your likelihood of that scenario?
Well, unfortunately, it's getting very hard now to see how it can be avoided. But the question is, when does it happen? And clearly, it's not going to happen today or tomorrow. But the risk of something happening over the next few months and quarters has gone up exponentially over the summer, when Europe really had the chance to fix Greece and to fix Italy properly and didn't take it. And so now you have to start questioning the political will and the political ability. It takes a long time to get things done in Europe, a long time to sign treaties and get everyone to agree to something. So the danger is that the markets are running faster than the Euro politicians could run, even if they knew which direction they were running in, and they don't at the moment.
No, they don't.
So then we have this series.
Well, because Ian, what I'm trying to get at is that it sounds as if you're pricing in a Greece default. What are you pricing in terms of as you say, a bust, basically a bankruptcy in the financial, in the financial sector? Are you talking about more than a 50% chance? What are you pricing in?
Unless there is a major policy shift in Europe, then the risk is more than 50% now that at some point over the next year or so, and possibly much sooner than that, we see major European financial institutions getting into very serious difficulty and then feeding back into the US. And that's why I think, yeah, a bankruptcy or something that looks very much like one, yeah.
Okay, Ian, thank you very much. I appreciate your comments.